Okay, how we going there, guys? Just let me know if you can hear me loud and clear. G'day, Peter. Now, hopefully, today we run a bit smoother. I've done my download check and everything seems to be good with the internet. Funny enough, the actual download speeds popped up a bit, so I think they can play a bit of games. Otherwise, they've just got better, which I sort of, I don't believe. But yeah, we'll see if it goes well. I've upgraded the actual streaming system that we use, OBS it's called. I just did an upgrade, so hopefully that could help out so we don't get any dropouts. I just want to aim to not get any dropouts today, and we'll be good. I'm guessing we're hearing me loud and clear. I hope so. Just let me know if you can hear me okay. Okay, beautiful. Just no video yet. No, that's good, that's just me. I'll just close this few things down. Alright, I just want to have as little open as possible so we're not getting, not straining the internet too much, as we know what that does. Alright, welcome guys, welcome to TradeSetup and live stream. It's the 8th of Feb, so we're ticking along nicely. I just want to touch on a few things. So obviously we have a bit of a general chat today about the macroeconomic, what's happening, the market pounding of late, and I'll just give you my views on that and just trading in general sort of during these environments. I think it's very important to just be careful, not take too many chances when the unknown, well, when the markets are pretty much unknown at the moment. So we'll talk about that. Firstly, I'll just touch on, for anyone that's new, you'll see it's top left-hand corner is our Twitter site there. Top right of the screen will be Facebook. Don't worry too much. Don't have to worry too much about that. Just if you want to join us there. And the bottom right is our YouTube channel. So you can link into us on YouTube. And there's a few more people that have been jumping in of late and viewing the videos. So welcome to you guys. Also, just a general advice. So what we talk about is just general advice only. We're not taking into account anyone's situations. We're just giving you some opinions on our trading and what we're looking at. So to kick it off with, just remember, for anyone that's interested in your cryptocurrencies, I know we've been spruiking a bit, Ivy Coin, we're actually in it. That closes off, the ICO will close off, I think it's tomorrow. So if there is any interest, just remember to send us an email and then we can get you organised into if you want to take part of that. It's looking well and truly oversubscribed at the moment. We're lucky enough to have access to a reserved allocation through a contact. So if you're interested in that, just give us a yell. Support at tradesetup.com.au, or you can go to support at tradedirect365.com.au. What else was I going to say before we got up and running? It's Ivy Coin. Yep. Oh, also, just remember, if you're interested in that that channel, which we just put up, I've just jumped off it now while I'm talking, but that's I sent out a few links previously. Just remember to, if that link's not working, you may have to just let me know and I could send you out a new link. It should be the same one, but I'm still new to all this. So we've been jumping, having a bit of a chat the last few days. That's going to start getting a bit busier. Got a few more people jumping in. So it's great. I think it's good just to have a bit of a chat about different things, put in your opinions. I'm just posting a few little intraday trades I've done. Well, I did one today, made a few points and it kept going up, which is not unusual for me. And just a few charts of things that I think are important to keep an eye on. We'll talk about those as well today. But yeah, just let me know if you have an issue getting on or if you're interested and you haven't got an email from me, just send an email through to support at tradesetup.com.au and I'll reply back to you with the link. And we're going to send out an email hopefully later on today to the whole database. So I think it'll be good. I think it'll be a good little forum to jump into. You can actually download it on your phone too. So if there's anything you missed, it'll keep you up to date. Anything you want to talk about, you can jump on your phone as well and just put in a few random comments if you like. Always good. Want a bit of fun there, so more than happy to see anyone jump in. Now, let's get started. Just going to transfer over to the other. That's it, so we'll drop that. So now you should see us. I want to kick it off with obviously what has been, obviously the market's been pounded the last few days. A lot of volatility is coming to the market, and that's obviously, a few people are sort of saying that, you know, you can get out there and you can view any sorts of opinions. You can hear any sorts of opinions. The market's overcooked. There's, you know, too much on the downside. We're going to resume the bull market. Everyone's got their bias towards the market. I like to try. I mean, I've tried it in the past to just keep unbiased. I think that's, you know, it's more of a discipline act than anything else, because you're always going to be biased one way or the other, especially if you're in the market. But if you can train yourself and just practice being unbiased, you know, continue taking a step back from the markets and just viewing what you're seeing on the charts, not listening to other rubbish, because don't forget, they are going to be biased up or down. And I saw a comment on Twitter. You always see the news feeds when the market's rallied hard, they'll start talking about how good it is. And when the market's basically crapped itself, they'll start talking how bad it is. But generally that's, they're at the wrong end. They're not caring about what is actually happened. They're not caring about what's going to happen. They just like that news story. That's the, you know, those headlines that are triggering the emotions and getting people to read it. That's all they care about. So sometimes it's probably the worst thing to do is start reading about different bits and pieces. And if you're a chartist or if you're a fundamentalist, just drill down into what you've learned, what you've looked at, and the reasoning behind it. Look at your charts and try to become, you know, like I said, take a step back, try to view it from an unbiased opinion and what you're actually really seeing in the charts. Now, I'll go over to the ASX. I think we'll start off there. Obviously, that's a beating. Now, if you... it was pretty much all in the one session, but if you go and measure it out, and this, if we go back to the weekly, if you just measure it out, the trend, it has touched down. Actually, let's draw it up. I'll draw up a couple of things. And this is just, everything I'm saying here is my own personal opinion on what I see, what I'm looking at. I'm trying not to be biased. Like I said, it's, you know, we've seen this a long time, a lot of times, to be honest, even as a broker back in the day, years ago. Remember the Japanese, the tsunami that hit the, was it the nuclear plants, caused a massive sell-off. Obviously, that was news-driven and fear-driven. The market got crucified, but when you took it apart and figured out what, you know, what did it really mean to the markets? Really not a lot. And I remember speaking to clients at the time saying, you know, maybe, you know, if you're in this for the long term, just look at what you've got, the holdings you got. Is there anything seriously wrong with the holdings you got? And then just try to take it apart, take the fear out of it, take the, you know, the guesswork out of it, and just look at what you've got. And is this really going to cause any problems for the overall global market? What are we led by? We're not led by, obviously, what was happening over there, but we're led by the US. So why are we seeing this sell-off? Is it just panic? Okay, if it's just panic, should you sell out of everything? Probably not. But instead, he actually did sell out of everything on the day, pretty much, you know, a few points from the low, and then it proceeded to rally from there. So sometimes you've really got to sit back and take an unbiased view of what's happening. That was a bit of a rant, but I'm just trying to get across, you know, times like the GFC. If you look at, if I just take a step back, look at the GFC, for instance, that was an absolute shellacking, but it had a bit of, it had a lot of fundamental bias towards it. So you look at what happened there and why it was happening. Yeah, there's every reason why it should have got sold off potentially. The market had gone fairly hard. Then they've had a massive problem with mortgages in the US, potentially the whole global system melting down. The banking systems were melting down. They had to get supported. They had to get the, what is it? The support fund come out, go into the market and support the overall, you know, in the US. Support a bit of a meltdown. So that was a bit different to what we saw just now. I mean, really, the global markets at this time they're growing. Interest rates are looking like they're going up, and now interest rates only go up when there's a good economy, good, strong, healthy economy. It's really a means to slow them down, not to, you know, anything to be too worried about. So it's just that it's been a bloody good run of late, and obviously, when you've had a good run like that, everyone's just on the trigger, ready to sell out if we, you know, just to lock in those gains. And that's pretty much what's happened, I think. And it was quite random, really. We had good numbers out of the US on Friday night. Well, they payroll figures, which was pointing towards pretty much an acceleration in, you know, that's what they're all worried about at the moment, an acceleration in interest rate rise in the US. Now, that was pointing towards that. Bond yields spiked. And it's just triggered a sell-off, probably end of week, whatever it was. Big sell-off, and we dropped 600 points, and that probably triggered a lot of other things as well. Triggered a lot of stops in the market. It triggered a lot of computer selling, whatever it may be. The double shorts, I was reading about that. The double short ETS in the US were, hammering the market as well. So a lot of things come into play and just drove the market down. Got an extra sell-off on Monday night, which just created that panic into our market. But really, what you can see by this chart here, I'll draw it up a bit better. What you can see, it's just come down to a nice little zone. It's holding that weekly trend up on the ASX. It's driven down, and we've spoken about this before. There's a number of ways of looking at it. Just drove down into that region here, and you can also see, if I just remember, okay, it was here. From that low to high, sorry, high to low, down where we previously found support, we've had this new leg up. From that low to high is about equivalent to this. Okay, and that just took us all back down to support. Bit of an extension of that zone, but it's reacted off there as well the last couple of days, and so that we want to see hold and then start to build from here. But if we do see a breakdown in this zone, the next thing we're triggering is that we're going to be testing down towards this 5650, and then there's going to be, you'd look at a longer term macro correction, and by macro we mean a break of this uptrend. It didn't get too much further than that 6,000 level. We've extended up into it, broke down. I'm betting that we're going to get a bit of volatility, but I'm hoping, well, not hoping, but I'm biased towards this holding and start to see that level start to hold up. We start to see some higher lows building and then taking out that high eventually. Going to take a lot of time considering what's going on and the market fear. It's still going to be quite a bit of fear gripping the market at the moment, but I'd like to see that hold and start building from here. It would all add up. Would be quite nice, especially in our market, because we're not looking towards rate rises. It's just that massive sell-off in the US. Let's take a look at the US then. Seeing where they're at the moment. That's the what's that? The S&P on the weekly. See a good, and that's a good little reversion back to the mean on the weekly. I don't know what it's sort of showing. Let's just see. I'll just draw it up. What it's showing on the charts, whether that's just a big pullback to, see, even that's pulled back, so that's a good sort of a reversion to the mean. It's a big washout at the moment. That's what it's looking like, but I'll show you bonds in a minute. Even on the bonds, the UST bonds, what's caused the trigger, what's triggered this bit of a sell-off, even that there is showing a bit of a, it's getting extended and it's coming into support, so you'd expect a bit of a bounce. Who knows if it's just going to bounce and then roll over and you get a massive hammering or not. But everything's starting to line up as more of a major correction, a bit of a washout. So we'll see. We'll see if it plays out. I think the thing to be is on the defensive now, not be too aggressive. Don't get too excited thinking we're going to be a big market bounce, because this could get choppy. And remember, the GFC originally sell off. Then we had that bounce. Everyone was back into it again. 50% retracement of the original move down, and then we got absolutely hammered after that. Again, a slightly different scenario, but it could happen. We could have that secondary leg down to create that really big washout, and then we start to see buying opportunities come back into the market. Buyers start to step back in and start to push it higher. Does that make sense, guys? Hopefully, you understand what I'm trying to get through. Even that's the FTSE there has been pounded, but look, pulling it back one step, the daily doesn't look that great, but we got a big reaction last night, and still it's coming back into a bit of a buy zone. We've still got these levels through here, 71, a higher level through here. It's starting to reject on the weekly, and could easily wash out these minor levels, especially when you got another level so close. And if you know what I'm talking about there, if you understand what I'm talking about, it can happen time and time again. And that's just, again, it's just washing people out of the market. So a lot of the times you get these initial levels. So you get a little level through here, and then you got a more of a major level through here. Because they're so close together, they can easily just wash one out and then bounce straight back up again. Then you get that secondary buying. Does that make sense? Yeah, actually, we might have a look at the VIX index. Volatility index. I know that's a big thing at the moment. It's still quite high. It has backed off a bit, but in considering where it's been the last few months, it's still quite high. But again, they're all those sorts of things are leading and lagging indicators, lagging things. Of course, the volatility spiked up when the market craps itself. Sorry about my language, but I find it quite interesting. Yeah, but again, this looking back at one chart, we've got that daily reaction lower, which you'd expect, that complete capitulation. It's down to extended zone, The weekly still, I mean, it's still in the zone where it can easily hold that trend up. The DAX pretty much the same. You've got the DAX high, low holding at 12,000. That uptrend is still holding. It was just the savageness of the actual move down that caught people off guard. And again, just remember too, when the markets go so high and keep ticking up, you can't just sit there and honestly say to yourself that, oh, this thing's just going to keep grinding high and I'm going to keep making money. But when it does come down, we do see a sell-off. It's going to be a bit of a slow process. Generally, the harder they go up, the more vertical they go up, the harder the reaction down. And that's probably what we see now. And it can happen towards the end of a bull run, but I just think we've got a lot of water to go on the bridge before we start classifying this as the start of a major sell-off, or are we going to resume the trend up? I think there's still quite a bit of, like I said, quite a bit of price action to play out before we can classify it each way. I mean, the weeklies are still up. The weekly charts we looked at are still going higher. They haven't broken trend yet. The daily trend is getting extended, whether we just bounce up, say the DAX, for example. We bounce up, build a lower high, and then had that secondary sell-off and start breaking this low at 12,000. I don't know yet. It's too early to say. But we'll just go through what could trigger it. Let's look at the... this is gold. I was going to have a quick look at this. You know, that's on your daily. Yeah, it's your daily. We could be finding... I mean, that looks like it's heading higher, but don't forget we're finding bad English. We're finding a bit of resistance up here on gold. And it hasn't proven to be a nice little safe haven when the market's capitulating. It's actually gone down instead. So just be wary of gold if you're jumping into that as a bit of a safe haven investment. There's more bonds that are going to be safe haven, and more because they're going to give yield. And we've spoken about before, edging out of stocks, going into bonds as they produce yield. But I think we still got to start that rate rising process, and maybe the current market conditions, the Fed Reserve are going to start taking into account, maybe not raises as quick as initially thought or as we're anticipating now. So there's still a lot to find out before we start picking directions. Yeah, that's true, Helen. I remember watching all the markets come up into resistance. They backed off, the US busted through, and that was the start of the GFC. It turned around and just capitulated from there. So it's dragged people in, washed them all back out again. Now, this is gold. I think this could, just keep an eye on this. We're getting a bit extended on the daily to the downside here, so we might get a bit choppy. We might just blast up through and then start holding this, but I think the way we're getting a bit choppy here, we may wash it out and then start holding lower highs back down. You know, again, I'm not a big fan of just buying gold here. I think the way it's moved down, we bounced and we started creeping higher. I think we need to come back down and retest, potentially retest down here, or somewhere maybe just in here, a bit of a retest here. That washes out a lot of these buys that have built up, and then start holding major high lows if that's the case. So that's not really convincing that the market's going to have a big sell-off. Let's get over to the US bonds. Oh, there we go. So we're looking, this is our weekly chart up. We sent an alert out that this could be a bit of a buy zone. I can't draw it up on here, and I don't know why. Yeah, no, that's exactly right. And I think nowadays, not just the herd mentality, but you get everything else that, you know, if it is computer selling that's triggered the sell-off because it started triggering their algorithms to start smashing the market lower. You got the ETFs, all sorts of things that started getting triggered at the same time. That could go more into explaining what's going on. Then obviously once it starts getting to a certain level, you know, a 660 point drop on Friday night is going to trigger anyone's radar. It's going to come onto it. And if you are holding stocks, you're going to be, the fear has to creep in. There's no way around it. And that's the best of us. You know, even the professional traders start looking at it going, oh, what's going on here? And maybe start edging out for no real reason. It's just going to happen. This is on the daily. Oh, sorry, this is the 10 years, sorry, Pete. The 10 years if you're looking at it, 10-year T-bonds. Well, I'm pretty sure it's the 10 years. Yeah, remember, I don't know, it was maybe years ago, they had a massive flash crash. And they in the US, and it was 1,000 point drop for no reason. It was just out of the blue. Now that what they've done since then is put a few constraints on the market. Automatic close down of the actual market. They've got limits, intraday limits. Is if the market gaps down or gets smashed, they just stop. stop trading, let everything reset, and then come back online again. And that's because of the flash crash, the computer selling that absolutely smashed the market. And it was pretty much, the market was searching for a bid at that time. There was just no bids out there. They took them all out. And that was attributed to that computer selling that just triggered. They just fed on each other. And what that happened is fed the fear and everything. And just everyone chased their stops down. It just chased everything down. And when there was nothing left to, you had no buyers left in the market, it started chasing itself back up again. Yeah, limit up and limit down. Exactly like in the, your commodities. And I don't know, but I thought it was triggered in the Dow the other day when we had that 1,000-point drop on the Dow, and then it continued down out of market hours, out of US hours, in our hours, down another 800 points. And what was that? That was Tuesday day. And then I think it turned around that night, it was up 100 points. So, yeah, some massive volatility coming just then. Now, back to the bonds. I'm still looking this, you can see, actually, let's bring up the chart. I'll bring up the chart if I can of just what I sent out. Bonds. That was it. So what we're looking at here, what I sent out a few days ago, is more that extension into that zone. And this is what we just spoke about when you get a nice little support zone and the market wants to wash it out. Sometimes you just spike through, have a little spike through. It knows it's going to trap those short sellers into the market, turn around and just reverse on them and squeeze them back out when it reverses back up again. But it can happen quite a bit, and it can extend more than you expect when you've got a little support zone. And we can see the longer term weekly support zone here. This is your daily. That's your rising support on the weekly chart. Now we've had that, and that's the rally in yields, or inversely the drop in bonds. They spike lower. You can see that really start to capitulate the last few days, really start to accelerate in support. It could easily pop down, and that could be your more volatility entering into the market. But in saying all that, it is down in a good support zone. It's extended down here. There's every reason why it could extend into this zone and then pop straight back up again. Okay, and we don't know what's going to happen after that, but that's the sort of scenario I'm looking for just at the moment. Because you've got to remember too, anyone that has, I've got to just remember how to do this. Auto, it's not working. Anyone that sold it in here and know that we're coming down to that support zone, they might just want to take some profits off the table. And that could be the opportunity. You get those opportunistic buyers in this zone here looking for it. Okay, just below support. We're happy to buy if we start showing signs it's going to spike back up again. So there's every reason why this could pop back up. But I still think, I mean, you can see by this daily chart, the anchor to this is still here. So until that breaks, and it's still looking like there's pressure to the downside, we might get that little spike down and then bang a savage reversal. I don't know just yet. But I think it's playing into the hands of more that, the equity market's been a bit overcooked on the downside. Maybe a bit more volatility still coming in, but starting to hold up at current levels. All these sort of things are working together in my mind anyway, of potentially that's, we get this little pop-up in bonds. Okay, that takes the pressure off the equity market, where they are, and then we get a bit of a bounce. But I think from there, just be careful that it's not a, what do you call them, a dead cat bounce. Bounces up, builds a lower high, and then we get that secondary move down because the bonds could easily spike up. Hold this level, if I can draw it. Hold this major anchor level. And also, what can I do too? I'm still a beginner to this one. Continue that squeeze lower, so it could pop up here. I want to draw it. There we go. We could easily get an extension here and then start to hold some higher lows, push up, hold this resistance down, and continue the squeeze. Because really, the reasons for this holding that is interest rates. They're raising interest rates. That's what they're looking for. So we may just be wary. I mean, it's whether this big flush out in the overall market is enough. And then people look back to the economic story, the global economic story, and the US economic growth to say, oh, well, hang on a second, it's probably the flush out we needed. We start to look for some nice trade setups again to go long. A lot of people have been squeezed out of markets, put back on the sidelines. All this, the future, like I was saying, what's going to happen over the next week or so is we don't know, because things could come out of the sidelines and just cream the market. But I'm just looking at it thinking, okay, this could hold up. We could hold up here. It's just that squeeze we're looking for in the overall markets, that big flush out of what we thought, and then the market start to hold up and we start to resume the uptrend. We'll have to see. Like I said, it all goes into the hands of just being wary. You know, really being cautious in the markets the way they are at the moment. All right. Now I just wanted to go through all that. I thought it was worthwhile talking about, considering that I have spoken to a few people over the last few days that have got stopped out of a few trades. And we got stopped out. We're down to one position from, I think we had 6 or so the other day. We got stopped out of a few early, which is fair enough. And that probably, again, that was more conducive with just the market getting tentative. That we had a few that would take off, they looked good, and then they just turned around and fell over. And then we got stopped out of the rest, obviously triggered a few stop outs the other day, which I know that a lot of people got triggered, stopped out of the market too. Squeezed out, so okay, we've got nothing really. I'm not looking too much at the market at the moment because I just want to keep away from it. Yeah, stocks, just what's happening. Just to keep an open mind that we could easily roll over again. It could put a bit more pressure down the track, and really just letting that volatility work its way out of the market and provide us for some good solid entry setups. And it has to be a good quality entry setup to be diving in right now. What's everyone else's views on it anyway? While I'm at it too, don't get I guess, like I said, I've spoken to a few people that have been stopped out. Don't get too disillusioned with it. It's just the nature of the markets. That's what happens. And that's probably why it's really good to know. And that's what I would personally spruik, and this is my own personal opinion too. Like I said, I'm not giving you advice on anything, but is really to know exactly where you've got to get out. And even when the times are good, if times are good, you probably don't have to worry about your stops that much. That's great, because they just keep kicking on, keep grinding high. You book your profits. You might get stopped out of a few here and there, but it's less likely. But it's always likely that you're going to get stopped out when the market starts getting really volatile and irrational. And that's why it's important to know exactly where your stops are going to be, because that's just one of those things that the market's going to do these from time to time, squeeze you out, and that's why it's... Sorry, I'll get rid of that. And it's good just to know exactly where they are, where you're going to put them. So if it does get flushed out through that level, I mean, you're probably going to be wrong, and the trend has changed. Something's happening that you don't like, and really honour those stops. Don't try not to second guess them, is what I'm trying to say. Honour them, and if you do take a bit of a hit, so be it. There's always another day to come back and fight, and that's what the markets are about, and that's why people have problems with them, I guess. From China, some weeks ago, no longer wanting to buy US bonds. Yeah. Yeah, that's one thing. They just keep buying. It's more the US dollar they're buying, and they're just buying bonds supporting. But don't forget, China muck around with that sort of stuff a lot. And if they view it like, they're getting too expensive, we'll just randomly put out a comment, and they can do it. They tend to talk it up and then do the opposite because they know that they've got some pull in the market. So, again, it goes back to the charts. What are you seeing on the charts? And then you trade accordingly, because they could be saying one thing and doing the other in the market, which you don't know. And that'll show up in the charts. To grab the bargains, yeah. Look, Paul, you're exactly right, mate. I know you've been waiting for a while. This could be that opportunity. It's starting to look at what names you like. I know, Paul, you like to look at the fundamentals a lot. There's some that could come right into your ballpark now, and everyone else too, looking for those quality setups. And if they come into your ballpark, it could be worth, but you just got to know exactly, again, know where your risk is. Good work, Paul. I think US has further to go. There's no real support levels close by. Exactly. Hyperbolic trends, and like we always spruik, this is why I'm tentative to think this is becoming a bit of a bounce. Look at what happened to go and look at a 5-minute chart on the Dow. Actually, I'll bring it up. It got smashed. It got smashed in the last 5 minutes. I was actually about to send out an alert. I'll have to go back down to the 5-minute chart. It was about here when I put the data into the alert. Okay, the morning jump start. Okay, it was up at that stage. I put the data into the alert, And then when I nearly finished, I was about to press send, and I thought I'll just have a quick look just to make sure, because I know it was slightly before the close on the Dow. I had a look, and all of a sudden the S&P's down 12 points instead of up about 4 or 5. I went, oh, what's going on here? Something's a bit, maybe my data's wrong, something happened, but I went and checked this. It got absolutely poleaxed. You can see that, the market just got sold off, and that's, from that high there, coming into the close, and that was, I think it's before 8 o'clock our time, am I right? 12:50, yep. Yeah, so that's before 8 o'clock in the morning. It was 7:30, 7:35. I sent it out. I put the data in just here when it was looking quite sweet. 25,100 down to, got sold all the way down to, that's 10.50. It actually got sold down to 10 past 8. So not very long. It got sold down to, what did I say, 25,100, say, 24,750. So what's that? 350 points, bang. That's a big jump. That's a big beating, really. So that's just going to show there's still a bit of, who knows what's going on just there, but there's still a bit of tentativeness in the market for that to happen, for that little volatility spike in the last 10 or 15 minutes before the close. So, yeah, I think you're right, Helen. And like I said, we're always looking for, like I said, a lot of times you're looking for that secondary move down. Maybe we've got that bounce there and we might get a secondary move down in the US. It's just, we've got to watch out to see how our market fares in the meantime. Yeah, it's great, isn't it? That's why I had to check mine. Exactly, John. I actually started tapping mine. I was checking a few different sources to go, nah. I was looking at Bloomberg data, and at the moment, I'm not trustworthy of the Bloomberg data. I don't trust it as much. I think I don't know. Either they're late, they muck around with their data, or something's happening, especially on the close. And I had to go and check it. So I checked on this system here. What's this? TradeView. I checked on this and just saw that, and I went, okay, it's all right. Just got absolutely hammered into the close. So it was interesting to say the least. All right. Yeah, they are. Look at them. Let's go back to, we'll look at a half an hour chart. Just trying to see what's happening. Oh, auto, there you go. And look too, this is a bit, just be a bit careful. This is a half an hour chart, and this sort of works into what we've always discussed. I'll see if I can get more data. I just want to see if it shows up on an hourly or a 4-hourly chart. No, so this is a lot clearer on the half an hour chart. So, okay, just before we go, look at that. Look at where we are on a 4-hourly chart. We've had that big sell-off, big bounce. We're extended on the upside, so that buying pressure has really pushed it up, but it couldn't get back up to where it fell over from way back at 26, say 200. This zone up here, okay, big selling pressure went from overbought up here, not so overbought here, and just got absolutely poleaxed all the way down to that 2300 level where it was oversold. Buyers have stepped back in, pushed the market as hard as they could, but it was only really probably about a 50% retracement. I don't know how to do fibs on that. So that was about a 50% retracement. We're back in that oversold. So that, to me, is looking like it's going to roll over again. If we go back down to the 30-minute, just to get a better view of it. This here, well, there's a lot of things that don't look too great. So just be wary of what we could be seeing potentially tonight. So for me, because of what we're seeing here, like we've got this breakdown here, we've got a lower high in place there, and that's after we've just spiked down, created that lower high. So to me, the sellers are going to be in control, and we might get from here, we might get a bit of a push up before the US, and then bang, we could get this massive sell-off again, and then we're going to have to look towards that support zone again. I mean, it doesn't sound good, but that's the potential for the Dow just to start volatility start increasing again. That could probably coincide with a bit of rally in the bond yields or a sell-off in the bond prices, like we said. That little spike lower into support. We could get this bit of a hammering down here. We may fall short. Who knows? There's a few support zones to come into. This one's pretty much about gone now. And there's a little minor support zone in here around that 25.6, say. So we could easily get that sell-off, and that's, what's that, 24.5? God, that's a 600 point drop, if that's the case. So just this price action here is looking conducive to more selling coming into the market. So just be wary. It's worth just, well, obviously, waking up tomorrow and having a look to see what happened. If you know it's down 600, we know what happened. But just be careful that if you're getting into anything today, anything could happen. Just by looking at this half an hour chart in conjunction to the 30-minute chart. Let's look at the daily. What do we got here? Auto. That daily, and sorry, the daily is coming off extended to the low. So I'm expecting, this is why I'm more of expecting, if I take a draw of that, I'm actually expecting, well, that's not good. Let's redo that. Go away. Come on. I just want to show you what I'm more looking at than anything else. And this is, again, my view only. So with the Dow, because I know that's going to lead us, especially if they get hammered, that's going to lead us lower. We know the 4 hour is looking a bit toppy here. The 30 minutes looking like it's going to head south. But you've got the dailies coming off a nice little overextended to the downside. So there's buyers starting to step in on the daily. So we could get this type of price action where we just get, you know, a lot of choppiness working before we start getting some serious buying. And that could take quite a while to work its way out of the system. And that's just the volatility working its way out of the system. So, yeah, I guess that leads everyone should, you know, should be thinking, leaning towards the cautious side. But I'm just thinking that if that's a heavy sell-off, and especially if we do react lower on the, like I said, the 30-minute chart, that's not very good. Come on, guys, be nice to me. Auto, that's a 30-minute. Yeah, that's your lower high here. The pressure's coming in. If we start breaking through this level here, it could capitulate. We don't know. If we just head straight down, whoop, that's not what I want to do. If we just head straight down here, then we're going to have to look at what's going on, where we're going to head to, and just see if it bounces off those support, and then see if which sort of scenario is going to play out. Whether we just get an absolute shellacking from here and head straight down through this 2300, or whether we start to hold up and buyers start stepping in looking for bargains. Yeah, no, you're right, Paul. And this is why it's good just to sit back, relax, and just watch the action. At these sorts of times, I'd rather just sit in intraday trade, because the volatility as an intraday trader is spitting up some great opportunities. I've just posted one today. I don't know where the ASX is at the moment. Let's get back to it. It's down 10. So it's had a good little short. I turned around and went long on a different setup. That gave me a good little long. So I could be completely wrong by the end of the day. It rolls over, but I was able to take a little trade on the upside because of the volatility. Volatility is great when you're an intraday trader, so that's probably time to step aside from the long-term stuff and just have a look at what's happening intraday. Play around, even if you're playing around on the demo. It's a really good way to practice your price action trading and what we look at. You know, does that make sense? I'll just put through. Actually, I've probably got it here. I might as well bring this up. This is another platform we got. That's not it. Let me just get. Anyway, we'll forget about it. But it could be a good way just to play around with some price action. I don't mind intraday trading because it's a good way with us, you know, just have a small account to play around with. It's a good way to trade live. So when you're trading live, you generally watch things a bit closer and you trade a bit better. You hone your skills a bit better, and play around the small account at this time. And it's good to see, you know, your price action. Get used to what price action you're looking for. We talk about squeezes. We talk about, you know, markets stacked up one way on the short side. There could be potential for a long trade setup. All these sorts of things. It's a good way just to play around and get used to it. Anyway, this one is just Aussies and Asians mainly trading in the US, and this is true. Yeah, no, true. Once you get into the European session and then you get this movement into the US session, it's going to be interesting to see how it plays out. So just keep an eye on the Dow anyway, guys. Well, let's put up some stocks if you want to have a quick look. Last few minutes. That's great, Paul. There's your ARB. The weekly trend on ARB is pushing higher. You know, you don't really have too many levels to contend with at the moment, so that's still looking good. Let's just go, actually, go to here. Thanks for putting those up too, Paul, by the way. That's ARB. You know, looking at that, obviously that trend is, if you go from low to high, extend it out, because that's a good complex correction. Then you start, this is the new leg up longer term. Go low to high. There's actually a lot of fat in this one on ARB. If it can hold up here and we not get caught up in all the what's happening. What else you got? BGA. That's starting to look a bit tentative, but the problem with this one, it's looking more rangy to me. So just be, I'm guessing, just be a bit careful. I'll show you what I mean. It's probably pretty clear. You've got, with everything that's going on at the moment, you've got a massive resistance zone up here. There's potential that we're starting to build a lower high in here. We've broken down in that trend. It's all pretty clear, but we've got a massive base at the $4 level as well. So we could just work our way down. You know, so that's the massive move up into resistance. We start to work our way down and then start to hold up, especially with what's happening at the moment. So that one I'll be a bit tentative about, but it still hasn't really broken too many significant levels. It's just right up in that resistance zone. What else we got? Cochlear. Nothing to talk about Cochlear. Still, you know, that's still holding the trend higher on a weekly anyway. So we get through all this rubbish, and then that could just resume that trend higher. It's got a bit of a 177.50 to get through to resume that trend up. That could easily do that. Cochlear IVC. Nandor, true. Although the DAX is like a rocket. The DAX is a great one to trade if you're an intraday trader. That's IVC is looking great, Paul. That's, and look at the zone too you're in. You've got this nice, you know, flush out of these late long positions, especially with what's happened the last few days. Pushing right down, you're holding potentially a high low. The stochastics are smack in place too. Just drill down to the daily. So I'm expecting a bit of chop here, and then that to start lifting again. So that's longer term, well and truly on track. That's a cracker. Qantas, I may not agree with you on Qantas. Qantas, the one reason why I don't like Qantas, and I think I did send out an alert on this recently. I mean, who's to say who's right and wrong, but I like to be right. With Qantas, the one thing I don't like, you've had this move up, you know, good accelerated move up, then you start getting these high lows holding. We've broken one, we've broken two on a major level with this push down. And don't forget, this was a major level at $6 on the weekly. We can just show you weekly or maybe monthly through here. We've washed that out, so there is potential for a massive pullback on the cards, maybe, especially if he starts heading through that level there. And then you're probably looking towards extrapolating that out somewhere around 375, say, just at a glance, from that low to potentially down here. Brings us into another level where we can, you know, start to find some support and then work its way back up. Who knows at the moment, but it's just that weekly showing more weakness than strength at the moment. That's probably it. TWE, I think, has been going great guns. Forget about that one. That's heading up. Weekly's heading up. The daily's holding, ready to head up again. That's a cracker. Well done on that. Wow, I'm not, the last few days I don't like that action, and only if you just step back, you know, it's got to get through that 28, that zone pretty much for me, because just, and it's only, I say that because I want to point something out. I think this is a good one just to keep an eye on. Everything we look at, I don't want to discard, cancel, I want to draw. So it's pretty clear. You got your line in the sand here. Okay, the market's pushed up, found support here, had another push up. It reacted, and that's the same zone. Okay, that's the same zone. Reacted at that 28, had a pullback, had another crack at it, couldn't get through then, found more selling. Just cleaned out those lows as well. And we've having another go at it now. And this is not, see the steepness of this compared to this, it means that more selling's coming in on this rally, okay? And we're coming into that zone at 28. So there's further selling, stronger selling than what we saw previously. You know, here and here. All right. So taking that into account, more selling coming in, and then we're starting to react off that zone again. It's going to bring into contention this low down at 25, and it could lead to, and especially we're stretched, you know, with this move down, we're stretched to the downside. Buyers started stepping in, not as strong as previously. So there's more sellers stepping in. We got to that overextended on the upside. You know, the sellers, this buying pressures really pushed it up. They gave it their best effort. We can only get as far as that 28 zone again. And now if you look at just drop it down to the daily, you know, we had that little pop through, and then we've had that selling. Whether that's conducive just to what's happened in the last few days. Yeah, no, look, Paul, I don't want to say what to do or what not to do, but there's a worry. Yes, oh, great. A buy for me the last couple of days ruined it. Yeah, no, exactly. It could be just conducive to what's happened here. You never know. And then we start, the market, it holds up here, the market's okay, and then bang, we just start pressing back up again. There's nothing to say that can't happen. I just don't think this daily chart is supporting that. I think we may have to have a bit of a pullback. It starts dragging in buys, and then boom, up we go. Who knows? Yeah. Well, that's true. What else we got? Was there anything else? There's other things. Wow, so that's great, Paul. Thanks very much for sharing those, mate. Always appreciated. If you want, well, I'm just wondering if there's anything else you want to chuck up in the way of stocks, just put them up there now, guys. Otherwise, I could just share some of the trades that I was looking at today. And thanks, Helen, for joining in the chat there too. It's good fun, isn't it? Well, I find it anyway. Keeps the boredom out of my days. Not that I'm bored. I'm busy anyway. Keeping myself busy. What am I doing for them? Here we go. So these are just the posts we've been putting up on. I'll just go through those on the forum. Sorry, guys. Get myself in trouble. No, it's great talking to you guys on the Monday and Thursday. If you get on the stream, we'll have a bit of a ball. There's a video we put up. I thought, I can't stop laughing every time I see it. If you come on the Discord, the actual forum, you'll see it. It's previous about a bull coming out of a gate, cleaning up some other guy. It's a cracker. But anyway, so this is the. It's not that one. This is a 5-minute chart. I thought this looked like it was going to come under a bit of pressure, even after the bounce in the US, and it played out like that. Looking to this heading down that support zone, it played out quite nicely. You can see it's giving opportunities during the intraday. A good opportunity here. I actually missed that one as a short sell. No, I had it. I think I was trading it around here. You know, both sides. I bought it here. That little spike up, especially after we rallied in the US. You know that we're going to get a bit of a spike out, clean some of those shorts, or just a bit of a washout. Held some highs, retested those highs, fell over. I think I bought it into here, closed out just up here when it looked shaky. Was looking for a short in here. I just missed that. So this was today. What I popped out today. This here, I was actually looking at there, but I didn't trade. I didn't really do anything today. I was on the phone, I think, at the time when I saw that. I didn't want to trade it because I hate being distracted when I'm trying to trade intraday. It's a bit hard. I like to just switch off for a bit and just watch the charts. Pulled up short. We saw it pull up short of this zone here, just below 58.40, and it bounced quite strong. So this bounce strong led me to believe maybe we're going to have, you know, especially after we built that high low, it's a double, you know, essentially a double bottom as well. We've retested this zone and reacted up off it, and we reacted really strong. So the reason why, that's pretty much the reason why we had just pushed through that resistance zone, had a bit of a pullback, and we started holding there as well. And you could see buying pressure starting to come back in. So I just thought, all right, once we break through here, or if we do, we could easily wash out the previous highs, and we had another level to drive up into. And there's at least a 5 to 10 point move there potentially. So I'm happy to take that with a 4 or 5 point risk. Got a little trade out there, only got 5 points, I think, thereabouts. Before it started rolling over, didn't like the shorter term action. And I think as it played out, it's actually gone higher since. So there's a bit of action from today, just some intraday trading. But you can see the good thing is, if I just bring that back up, is just trying to structure the trades and just get used to seeing. You can see here when it rolled over, it was stretched, and this is a 1 minute chart. I know it's quite fast time frames, and it gets a bit choppy in the 1 minute, admittedly. But you also got the 5 minute in the background that I'm looking levels on, and the 30 minute, just to line up some trades. But it's good just to play around with, if you're playing around with the intraday levels, just to see, just like I said, practice your chart reading. And it's always good, even if you're a fundamentalist, for anyone. If you're interested in looking at some charts, it's a good way to practice. Playing around with a demo, playing around with a small account. I got a couple of accounts. I got futures account and the ASX, just the 200 CFD account that I'm playing. I'm just going to try see if I can build it up bit by bit and see where we can get to before I have a bit of a whitewash. But I think it's a good way to practice. It's a good way to learn your levels, to start reading. And don't forget, this type of price action and price structure, you can translate it to the bigger time frames. If you get good on the lower time frames, it's easier on the big time frames because it's a lot cleaner, I think, on the bigger ones, and you've got a lot more time to react, to think through your trades as well. So look, it's good fun too, good fun playing around. And especially if you've got a big portfolio, you're trading longer term and you've got nothing much to do, play around with your intraday if you've got time. Anyway, that's probably it for me. I think that was the charts. Oh, and this is the next one. So if we go back, this is creeping higher. So this actual 1 minute time frame looked quite good, but if you go back to the 5 minute time frame, I think this was it here. We had a resistance zone potentially. So it was just spiking up into that resistance. So I can drag people in and start to wash them back out again, and maybe find a support at 58.50, 58.40 before we start potentially heading higher again. So I don't think the longs are out of the woods yet. If you are long, there could be a bit of pressure soaking up, starting to edge into this market. Just intraday off the 30 minute chart. Let me just see if I can get it up. XJO. Intraday. So this is the 1 minute on the 30 minute. This is just reading this time. If you're just looking at this sort of price action, there's quite a bit of pressure down. There could be that second wave of selling, taking us through 58.40, maybe extending those lows at 5800 and then bouncing. We don't know. But there's still, on each time frame, we're still seeing pressure. So we had this big move up, and that's just what we were talking about before off this chart here, just coming up into that zone. It's pretty much the same zone here. Coming up here. Started going back down. We found a bit of support here. A bit of a reaction. Got a bit extended down here. It did react higher, but we've pretty much started selling down again from a lower level. Below 58.80 at 58.75. Started selling down, but we're just at that zone now. If we don't hold and start pressing up, we could see this selling towards the end of the day take us back through 58.60. Somewhere back near those lows at 58.40, or we do that overnight. But just keep an eye on it, guys. It's worthwhile. All right. Oh, sorry, Peter. I just saw what you're looking at. AYS. Let's get into that. And then we'll probably finish it up. AYS. Do we need to talk about this one, Peter? Got hammered. What happened here? Is that all of it? First half doing a trading update. Obviously the trading update's not very good. If we drop it down to a weekly, look, to be honest, I'm not a fan of this one. It could be stuck in a bit of a range until, if it's had some bad news, or even if it was good news, it was reacted like that off good news, it means that it's factored in. There's something else coming into play here. So if we just draw that up, I just don't like that, whatever that reaction today, someone's not happy with it. That support zone, we started lifting here. It's not really good either way, and it's just spiked up, probably brought in some more buyers, then boom, straight back down. So that's definitely broken out of, well, any sort of, it's broken through any sort of support we got. So I would suggest that's just going to be more rangy than anything else. If this can hold up, so if we, you know, if this is our support zone and we're starting to press down into it now, we may see a bit of a washout and then a bounce. That would be good, looking for a buying opportunity, just washing out this zone. Or, you know, we just press down into it and start reacting up off it. And then you'd have to, the next obviously port of call, we saw some selling previously, is up towards that 230, you know, pressing up to 230, and then maybe see what happens, whether we get a bit range. So at the moment it's looking like it's setting up to just bounce around between there, especially the way the markets are. We'll see how we go. Is that the weekly? So that's the weekly chart. So it was looking good. It started pressing up. Even not today, but yesterday, it's broken up towards that level, that resistance zone, and boom, straight back down today. Not good. What else we got? Spooling. Haven't heard that term. Oh, spooling. Yeah, no, I get you. Is that, yeah. Is it holding up? I'm hoping it's holding up. What was the other one? FMG. Yeah, FMG. Right, we'll probably finish it with FMG. The Big Short. True, Helen? I just play around during the day, just chip around with whatever I see. Now, FMG, let's go back to the weekly. I think the weekly's the one. It's important for me on the weekly basis that we start holding up here if we're going to go long. But I don't mind this sort of price action, what we're seeing. There's a lot of it too, isn't it? Spooling. It's a bit like tooling, but with a spur. All right, so you've got a support zone there. We're working our way down. I don't mind potentially that this is just starting to break up out of the contraction, but I think the last few days, last bit of selling. So what I'm looking for is that the fact that, oh, that's probably not good. That's your support zone, that's your resistance. We've just major level here, major test lower. We're just starting to break up here. Now we're coming down. I would like to see this potentially hold up, you know, around current levels and start to work its way back up. If that's the case, I think we're going to head up and out of this contraction lower, and buyers are going to start, especially if we get a higher low to work from. And if we can get and build that higher low, more intraday than anything else, that's what I'd be looking for. And I want to see it hold up somewhere, give or take, below or above $5. And if we can hold up and start seeing some buying come in, and it's in a good zone too. Look at the pressure on the downside for the daily. This selling, we've sold up from a lower high, a longer term lower high. We've pressed down. We didn't get anywhere near the previous 450 zone, and it got bought up. It's starting to hold up again. So we'll just have to see. I think there's still a bit of work for it to do, but if we can hold up here and start building that high low and start working our way back up, it could be a little trade on the upside with this one. Yeah, no, it did. It actually, it's held up all right compared to what's going on. All right. We might have to finish it there, guys. Forum. Actually, what I'll do, I'll get it up. I'll put it in now rather than muck around. I'll put it into the chat. I'm just going to get up there, and you could potentially copy. We should be able to hopefully just put it up into the chat. Where am I? There we go. That should be the link there. If you just jump in there, you should be able to get up. And this is it here. Whoop. So there's my little face there. Jumping there, Murray. Good work, Murray. All right, Murray. If you're in there and you can't put in the chat, it might be because of your Google. Just you've got to be logged into Google for YouTube to get into the chat, I think. you've got to have a Google account. Like I've got my little Google account. I'm always logged in so I can actually get in there and chat. And I think everyone else might be as well. So just check that. We can do a testing if you want. Otherwise, if you're not logged into Google at all, you can see it, but you can't chat. I'm pretty sure. So this is it here there, guys. That's the stream. You should be able to join there through this link and just have a play around. Call me names if you like. I know Helen does. She loves it. Oh, I think if you get here, you can right click on that. I'm pretty sure you can. Oh, there is a way to do it. It's called a. Oh. Oh, maybe I can't do it now, but I'm pretty sure you can change your profile, just your picture. I'll play around with it and see where I did it. I can't remember now. I did it when you actually log in, when you start going. I think it gives you the opportunity to put something in there. But either way, there is a way to do it somehow. Might be down here. Oh, okay, go down to the bottom left and you should be able to change it somewhere in here. But anyway. Appearance? Yeah, there you go. I'm pretty sure you can put it in here. Appearance somewhere. But have a play with that, guys. See what you think. Get in. Like I said, abuse me if you like. Oh, he's going, yeah, good work. Helen Judd. A trading cat. Good work. All right, guys. Yeah, thanks very much for joining me. If you do have a problem getting in, just let me know and we'll try to get you up and running for the forum here. It's more of just a public chat, so feel free to put up any comments, anything you're looking at. Yeah, anyone can comment on it. So we just get that. Just want to get the conversation going and get it started. So it just helping out. We want to put into some education things as well. We want to start running into it. So we've actually got the opportunity to talk about stuff in here through the voice channels. So we can do one-on-one as well. We're going to get out one-on-one mentoring down the track as we get up and running a bit more. But we want to just do a couple of, so that would be more paid content. But we want to get up some just basic stuff as well. So just get up and talk about things. So jump in there, guys. Always good. It's a bird, it's a plane, never mind. It's KA66. Great, wonder who that is. All right, guys, thanks for joining me. We'll speak to you again on Monday, and we hope we don't get too, if I'm right, we get belted around too much tonight. But we'll see how it plays out. Good luck. If you do have any questions, either put it in the chat if there's something you want clarification on, or if you think I'm talking rubbish, tell me in there. Otherwise, we'll speak to you again on Monday. Cheers. Bye.